Hello everyone and welcome to today's Daily Report Market Analysis videos with me, Richard Perry, Market Analyst at Hantec on Thursday the 30th of January. There's been another leg lower actually in risk sentiment, and what we've seen is that overnight there's been selling pressure through equity markets really. Nothing massive through Forex, a little bit of a shift back into the safe havens, the yen, gold's benefited, and interesting that we've seen treasury yields falling away. Now we had that Fed meeting last night, or the announcement for the Fed meeting, no change to monetary policy and little real to go on. The Fed statement was barely changed at all, a slight, very slight downward revision to household spending expectations, but yeah, I mean essentially the Fed did very little. In terms of the coronavirus, obviously that continues to extend through China, and the number of cases grows by the day, the number of deaths grows by the day, so it's not going to be going away anytime soon, and that still is playing out through markets. It's one of the reasons why we've seen, for example, the volatility on the VIX spiking back higher again today. It just seems as though that markets are once more sort of under taking a little bit of a concern from that. We've seen the S&P 500 gave up, if I zoom in here, gave up some pretty decent gains actually into the close to close slightly lower, and the futures are again lower now by about 0.5% actually now, so not as bad as they were, interestingly enough, but still lower, and that's enough to impact on the Asian markets, Nikkei lower, and the Europeans as well. But this is an interesting chart to watch, I think. The dollar yuan rate, which is, well, it's back up around that 7 mark again. So that seems to be something that I think the market is focusing on there. You look at the fact that the oil price is again falling away. We had inventory stock builds from the EIA announced yesterday. That hasn't helped the oil price, and obviously the coronavirus continuing to sort of flow is or extend is not good news for oil demand generally speaking, and that is why we're seeing oil price down. So broadly speaking, risk off, and you're seeing that measured through the the commodity currencies, the Aussie and the Kiwi, both underperforming quite badly. Interesting that we've seen sterling, which is unwound back towards 130, big figure again. We've got that Bank of England meeting today. That is the next important measure on the economic calendar, and the Bank of England is on the brink. It's sort of 50-50 with regards to futures interest rate swaps pricing, with potential for a rate cut. Now, we're not anticipating a rate cut purely because of the fact that it is Bank of England Governor Carney's last meeting. Let me get the expectations up. Bank of England Governor Carney's last meeting. You've also got the fact that you've just had the UK election. That should help to release some fiscal expansion, and also the Brexit logjam has been released as well. So we're not anticipating a Bank of England rate cut, although it's going to be a close one. It's likely to be 6-3 in terms of voting, so it's not a million miles off being a rate cut, but futures pricing, I think, has gone a little bit far on the interest rate swaps, so I think that that's not going to be helping. With regards to, I think it's going to be a bit of a volatile move whichever way you go with the Bank of England today. Other data points today, we've got the US growth numbers, GDP, the advanced GDP number, expected to be 2.1%, which would be in line with where actually the last, let me get that data, there it is, in line with the final reading of Q3 GDP. I might note that the Atlanta Fed GDP was, GDP nowcast suggests 1.9%, but GDP for the States, first look at 1:30 this afternoon. Weekly jobless claims 215 is there or thereabouts where it was last week. Okay, so that takes me on to my chart today. As I said, the equity markets are under pressure, and we're looking at the DAX, and the DAX has broken its uptrend of the past, well, since August, so it's about 5 months or so of uptrend on the DAX, and it's breaking that down today, but it's interesting that it's rebounded. So you've got a gap that's open at 13,296. Theoretically, that needs to be filled, and the market is doing a fairly good job of moving to fill that gap. But I'm taking the key support initially at this pivot line, 13,140. Seemed as though that it was fairly consistently holding a low around that as a sort of a mid-range pivot of the November-December range. And interesting again, that sort of 160 level came in early doors today, again around that low of where we saw on Tuesday. So the market is holding this support of that old mid-range pivot, but a closing breach of 13,140 really would be a bit of a signal for a downside move and towards the testing of the lows, and the lows coming in at 12,886 up to the 12,950 area. And that could be seen. You look at the momentum indicators, the RSI, sort of holding that mid-40s level that we saw, if I get the crosshair on it, 40 to 45 area that we saw as the October low and the December low. It's holding that at the moment, but look at those MACD lines still drifting lower. Stochastics not looking great. So yeah, it's on the brink, I would say, of turning into a market that would be looking increasingly corrective. But a closing breach of that 13,140 level, I think, would be opening the lows of this key support from the December low, and then that really would turn into an important moment. But for now, we're holding on to that support. As I said, gap fill is resistance at 13,296, and then you've got another pivot actually around about that 13,360 area, which again was yesterday's rebound high area. So resistance overhead there. But with that in mind, I wish you good luck in your trading. Click here to subscribe to our analysis videos and go to our website to sign up for our webinars.